Good morning, trade pros. Welcome to the morning market update for this beautiful Thursday, September the 17th of 2020. I hope you guys are having a great day. Today, I want to talk to you about a few things. We got a lot to cover. It's a pretty full morning market update. Let's kick it off. All right, first and foremost, we got to talk about the Federal Reserve yesterday and their announcement. The market's down 100 points since that, nearly 100 points. It did actually take the 108 point drop down to overnight lows on the S&P 500 futures for December at 10 quarter. All right, 33.10 quarter. So what led to this whole spill? Because what you got to know is, first of all, the seasonality of the Federal Reserve is always this, and the event of how it plays out. A couple days before, the market tends to rally into the Fed event in anticipation. All right, after the press conference or after the initial release at 2 p.m., there's a bit of a rally. We saw that yesterday, 18.25 points. The press conference could potentially upset, and the days that follow are down days. Okay, and that plays over most of the time with a pretty high degree of accuracy. All right, so that's what I was expecting. Last night, actually, while the market was trading around the 86, I bought some great puts on SPY, the SPY ETF, and curious to see how they're trading this morning. They're probably doing relatively well. And that's in anticipation of that. The Fed did disappoint yesterday, and I'll tell you how. At 2 p.m., the announcement came out with the statement, okay, no rate was changed. It was expected. Nobody expected a rate change to begin with. The dot plot hadn't really changed as well. It was unchanged. 0 voters thought rates should increase in 21. 1 of 17 voters thought they should increase in 22. And 3 of 17 voters thought that the rate should increase in 2023. Okay. The longer-term rate shows a 2.5% average. It's funny that all the way out to 23, the Fed wants to keep it at 0%, but the longer term is 2.5%. So that really tells you how far that long term is. It kind of quantifies it indirectly. Okay, so that's good. The market likes that. Yay, cheap money forever. But then it said that it's guiding its accommodative stance and expects to until it's going to be accommodative, printing $120 billion a month. All right, 80 in treasuries, 40 in mortgage-backed securities, until goals of maximum unemployment change or until inflation exceeds a target of 2% over a long run. Didn't quantify what long run meant. He was asked that twice. He didn't really give any clarification on long run. So basically, he's being more accommodative by the fact that he's going to let inflation run above 2%, overrun it on an average basis, and not start to raise interest rates as soon as inflation exceeds 2%. That's a very important thing. But we already knew that, and the market didn't really care. All right, so this is the good. It was up 18.25 points off that news event. And then the press conference comes, and Jerome Powell single-handedly kills the rally with one sentence. Okay, first he says the pace of the recovery would slow down. All right, and then he said more fiscal support is likely to be needed. That wasn't new. Jerome Powell has been talking about that for 3 events right now, saying, or 3. This is a second quarterly one, but there are other conferences and speeches that he gives. He's been saying more fiscal stimulus is needed from the government side. It can't all be monetary policy, which is what the Fed does. We need fiscal stimulus. We need more money. All right, and the market suddenly realized, holy crap, we do need more money. Jerome Powell thinks the pace of the recovery isn't that great. And I'm going to tell you this, Jerome Powell has the worst job in the world. I wouldn't do his job if I got paid 10 times the amount he did. You give me $1 trillion a day, I wouldn't do his job. I'm telling you, because I prioritize happiness over money. I'll tell you why I think that, because he has to say the pace of the recovery is going to slow. If he says the recovery is doing fantastic, that's what the market wants to hear. That means, why are you putting so interest rates at 0%? Why is there $120 billion a month being printed if it's so fantastic? So in one way, he's got to tell you the pace of the recovery sucks so you could justify this huge stimulus program that's being put into place. He says that, and then he says more fiscal stimulus is likely to be needed. And the market sits there and thinks, wait a minute, he's right. Markets are crazy. It's not new information. It's just this information was reiterated at a time where everyone was watching. All right, and then you look at what's going on. There's a new push right now to Congress to do a $1.5 trillion bill, which is lower than what the Democrats want, higher than what the Trump and the Republicans wanted. And there's very little chance that it actually goes through. There's a lot of opposition already, all right, on the Republican side. So, the markets woke up to that. Another thing that, if you read between the lines, is the Fed is saying we're kind of out of gunpowder here. You guys kind of read it that way? It seems a little bit of desperation. Like, if you continue to say, come on, the government's got to give some more money, we're doing our part, the government's got to give some money. they don't really have much left in their toolkit. And what is the next thing they could do? Print more money, okay? But from there, the markets began their 100-point drop and counting. We're close to overnight lows, just within 18 points of it, and that's 3. And I think we could see a continuation down. Okay. In other news, the Bank of England, which had a discussion this morning, said that they discussed negative interest rates and how to implement them if warranted. The pound got crushed after that news. All right, it had some upward momentum. All that was erased. It slid very aggressively. I'm watching it right now on the chart, and it's continuing to dump. It's near a multi-day session low. All right, here's the question. Will the Fed ever consider that? If the Fed is truly out of gunpowder, this is the dots I don't think a lot of people connected. All right, did Jerome Powell yesterday say that if the government doesn't do a plan, all right, that there's going to be more action that he's going to need to do? Does that mean negative interest rates? What would the impact of that be? All right, and I think people this morning are kind of getting risk off. They don't want to be kind of left to find that out. They say, hey, look, the market's run up quite a bit. NASDAQ hit 12,400 all-time highs. I got to take some profit. All right, looking at the ES, let me give you some levels. 50-day moving average has held all September on the S&P 500. It's hit it a few times. That average is at 3,333. I'm not making this up. It sounds like it. This is on the futures, not on the index. Cash index probably a little bit different, but I trade futures. So I don't really care about the cash index. All right, 100-day moving average is at 3174, and that's the next support. So at the moment, the S&P 500 is below the 50-day moving average. It just broke it. As I was writing it, it hadn't. NASDAQ, at the same time, the 50-day moving average is broken a long time ago. Not a long time ago, but it has still broken. That's at 11,180. If I look at the NQ futures at the moment, they're trading below that. They're trading, what are they trading? This is a little bit delayed, but 10,976 because I haven't opened the platform for NASDAQ yet. So, all right, that's the question. NASDAQ is pulling equities down. Will we break these multi-day lows on NASDAQ and equities? We'll find out today. Be very careful. I think this is a really very important level. And if you're already short, I'll be taking some profit today probably if we don't break the level on the overnight lows off the open on my puts. See what we get. All right, we just got to trade what we're given. Trade what you see, not what you're thinking. Your brain isn't going to make you money. Your eyes will in this business. It's funny how that works, isn't it? All right, Donald Trump this morning also says that he thinks distribution of a vaccine could begin in October or a little bit later. He said the U.S. could distribute at least 100 million doses by year end. All right. CDC said they think the vaccine won't be ready till next summer. Donald Trump is reiterating something that he's already said numerous times, and it's not a surprise he's doing it when the market's down a couple percent. All right. In other news this morning, Carnival Cruises shares are down 4%. They extended some of their cancellations, all of their cancellations of cruises through the spring of 2021. All right, which is sort of an acceptance of the pandemic causing a little more lasting damage. We'll talk about that in a little bit. I no longer talk about coronavirus. I think it has a significant impact in the way you invest and trade, but I've taken the stance to not talk about it because people take things too personally these days. And I would definitely urge you to do the research though from somebody who does talk about it. I don't cover it on the YouTube channel, unfortunately. I did, and then I decided not to for very clear reasons. All right. But you got to know that information. You got to find a news source that you trust, and you got to stop thinking with your emotion and start thinking with your rationality and logic and what the outcome could be. Because it's not about what we think, all right? It's about what's happening and how that's going to impact the value of our hard-earned money. Think about that. What's more interesting, a theory or what your money is worth? In today's markets, Japan's down 0.7%. Hong Kong's down 1.6%. China's down 0.4%. India down 0.8%. Everything down across the board. London down 0.6%. Paris down over 1%. Frankfurt down 0.4%. S&P down. NASDAQ all down over 1%. Sell-off here is en route, and we're getting very close to key support. I think we could blow it out today. We'll have a look. We got to stay vigilant. Crude's down 0.4% after some OPEC jawboning. Gold's down 1.2 along with the market. All right. In a Fed world where they print $120 billion a day, assets move together. Gold and equity should not move together over the long term, but here we are. All right, asset prices are pumped up by free money. Other news this morning, initial claims came out. I told you there's going to be a big update. A lot to digest today. 860,000 people filed for unemployment. less than the prior of 884, but the prior was revised higher anyways to 893, right? So still less than the last week, all right? But more jobs were filed for unemployment than expected. The expectation is 850. Here's the real number, 850, 860, whatever. That doesn't matter. Initial claims are around 200,000. Why are we 4 times greater than what it was pre-pandemic if we've recovered so much? All right. It's below 1 million, and people are celebrating that. They're saying, yeah, wow, it's below 1 million for the 3rd straight week. Let me put it a different way. 860,000 people filed for unemployment for a new loss of a job, all right, 7 months after this pandemic, right? That's a different way to kind of look at it. 7 months after the lockdowns began, okay? And here's the other one, 12.628 million people are still on unemployment. That's called continuing claims. They're still filing in multi-weeks, all right? So 860 is just the new filings. 12.628 is a continuous claim coverage or claims happening, lower than expected, but still exuberantly high. And I think today, after a Fed event like yesterday, the market looks as bad news as bad news. Okay, before bad news is good news. If the economy is doing terrible, the Fed will print more money. Today, all of a sudden, we wake up and bad news is bad news. Sentiment change could change like that. And that's what you have to learn about trading as a market participant. Housing starts missed this morning. Philly Fed came in with expectation, but there isn't really that much good news this morning, and so we're trading at the S3 for the day, a 33.16 quarter on the S&P 500. All right, that's where we're at. I think we get some more weakness. I could see an early morning attempt to bid, maybe the 15, 20, 30 minutes through the early of the session, try to stage a little rally, take out some buy stops from European traders overnight. We're getting ready to call it a day, and then head lower and probably close fresh lows on today's session. Look out for these prior lows on the ES. We break that. There's going to be a big spill of sell stops. That lies down at the low of September 9th, 32.95. Okay, we get below there, it's going to get ugly. All right, guys, love you on YouTube. Be careful. Now more than ever, you need a community. Hopefully you're not trading alone. The worst time of my life trading was trading in the bedroom by myself. It was the worst experience ever. I had more fun trading on the side when I had a full-time job than when I did it solo. Be a part of a community. It doesn't have to be ours, but if you're listening to the morning market update, it might as well be. Love you guys. Have a great rest of your day, and take care. Ciao. Trade pros in the room. Let's make that money. Let's set some levels. I think we had a lot of volatility today, and an opportunity to have a great day. One of those days that you make multi-day, maybe even multi-week income in a single session. Let's get it. Let's rock and roll. First, we start with oil. Then we'll go to the equities and print some levels and trade ideas that will play out. Let's get started. Steven, I'm going to throw you in to do the oil update. So let's get it. Love to hear about oil. YouTube, take care. Gotta go. Ciao.